Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. The GST Council meeting, which is to take place on July 11, may take up issues of online gaming, casinos and horse racing and discuss reports submitted by the group of ministers. There is no consensus on how to tax online games and whether to consider them as games of skill or games of chance.
SoftBank is looking to book profits by selling small stakes in Paytm's parent 197 Communications and Zomato. SoftBank may sell shares in the two companies in smaller tranches in the open market rather than through block deals. That's a Money Control exclusive.
Defense startup Mac Industries raises $5.7 million in a seed round led by Sequoia Capital, the first ever defense tech investment in the venture capital giant's history. The US-based company will use funds for product development, hiring talent and expanding facilities.
Hyperlocal super app Magic Pin clocked in a 50% growth from the previous month in daily orders on the ONDC network in the week ending June 11th. The company has crossed 30,000 orders a day, it said in a statement.
Microsoft shares reach new high. Microsoft's market capitalization reached $2.59 trillion, fueled by market optimism surrounding the potential of artificial intelligence. Throughout the year, the stock has demonstrated remarkable growth, amassing over 45%.
Britain's competition regulator clears Amazon's planned $1.7 billion acquisition of iRobot, maker of the Roomba vacuum cleaner. The Competition and Markets Authority said it had concluded that the deal would not lead to competition concerns in the UK.
Software firm Oracle lays off hundreds of employees, rescinded job offers and cut back open position within its health unit, the insider reported. The layoffs were largely due to Cerner's challenge to work with the U.S. Department of Veterans Affairs, which hired Cerner to replace its homemade medical records with Cerner's technology.
Cognizant's new CEO Ravi Kumar says financial services sector has fallen off a cliff. IT major makes structural changes to save costs and plans to move work to Tier 2 cities. Also eyes acquisition to plug capability and geographic gaps. That's a CNBC TV18 exclusive. Those were the headlines that we're tracking for you this evening, but straight to a CNBC TV18 exclusive. Cognizant's new CEO, Ravi Kumar, is fully committed in creating a gender-equal workforce. In a conversation with CNBC TV18's Shireen Bhan, he said that a hybrid work model will encourage more women to work. Speaking about the AI bet, he added that AI is going to amplify human potential. He also believes that artificial intelligence will create significant jobs in the future. Here's a snippet of that conversation.
I fully agree with my board that, growth lies in heterogeneity, and heterogeneity will come with a diverse workforce. So I'm fully committed to making Cognizant a very diverse, inclusive. We are otherwise a diverse, inclusive workforce, but we want to do more. We want to make that a differentiator for our employees and of our clients. A variety of ways to do that. Our hybrid work is going to embrace more women at work. I mean, we do believe flexibility is not at odds to productivity. So giving that flexibility will allow women to be in the workforce more. We have a large pool of women at the bottom of the pyramid. How do we actually traverse them through the journey and don't lose them on the way? There are a variety of techniques which we are applying on a workplace. Top down, we have metrics for our leadership, including the board, and right down, including myself. We have metrics for the board that our executive leadership team has to have a percentage increase in women. And that is not just me. The next 300 to 400 leaders in the company have those goals. We're also looking at ways to go to the adjacencies of our industry to bring women back. One of the things I'm very fascinated about is women who have left and who want to come back. We're almost opening up a green channel for them. So there are a variety of ways to do that. Now, coming to your question on, so we're very committed to it. We think it is going to help us significantly in the products and services we build in the market. We do believe that we have the infrastructure, the mindset, and the culture to do it, and that could be a differentiator for us. Now, coming to AI, it's a fascinating conversation. The narrative has gone all the way from literally in 3 months, from what can AI do to AI will save the world to AI will destroy the world. I do believe AI is going to be the biggest discontinuity in the technology space. It's going to amplify human potential. It's going to take away jobs of the past, but it will create significantly more jobs of the future. And that bridge can only be built through reskilling. And we are at that cusp of it as a company, and we could completely capitalize on this opportunity.
So, sorry to sort of interrupt, but what will it mean in terms of things like pricing, for instance? Does it help?
So I'll quickly kind of dissect this into two parts. On our business model, we have a pyramid, with the bottom of the pyramid doing a lot of repetitive tasks. So when AI comes in, there is this notion that the pyramid will break. And what happens to people who have lesser skills? My own philosophy is a smart engineer will always use the tooling and instrumentation, even if we don't subscribe to it or we don't consult with them. An average engineer wants the organizational infrastructure to have the tooling for them to be very productive. 30% of the code even today is written by AI. So we think as we make engineers productive, we can create upward mobility in their jobs and take the non-productive jobs and take the repetitive jobs to machines. The second big shift for our own model, so we make more productivity. As we make more productivity, I'm hoping that we could create more prosperity and more upward mobility for our employees. The second shift, I would believe, is if AI is going to take problem solving, and problem solving is how workplaces were built since the Industrial Revolution. Problem finding, the new big endeavor for humans, will come from a cognitive diversity. We think we should hire disciplines much beyond STEM, like liberal arts, design, anthropology, sociology, psychology disciplines, which will allow us to create that amplification of machines and humans working together. So that's what happens to our business. Our clients' businesses, we have wonderful number of opportunities. I mean, the large language models or the foundation models, which are run by the big tech companies, they're not production grade. You need a lot of heavy lift. That heavy lift will come from fine-tuning the model, and that heavy lift will come from adding judgment to the prediction of the models. I mean, I'll give you an example. If it is, if you're asking an AI model to predict percentage of rain based on data, it will probably predict percentage of rain based on data. It's not going to tell you whether you should carry an umbrella. That will only happen if you are able to feed context with a set of human specialists, or specialists who can train the model. I call them the reward function engineers, or prompt engineers, as some call it. And that whole thing, that whole heavy lift will be done by companies like ours. The use case discovery, that heavy lift, making AI more responsible so that it becomes production grade, so that it can amplify human potential. So, I'm excited about the productivity lever it's going to give to our clients. I would believe our clients will go through a re-engineering. I mean, large enterprises will go through a re-engineering. And that wave of re-engineering will be powered by AI, and we will handhold, orchestrate, and partner with our clients to do that. So the opportunity is only more than before, and therefore I'm excited about what it does to tech services companies. We have taken a head start on it. We made an announcement of Neuro AI a couple of weeks ago. So I'm excited about what it does to my model, as well as what it does to our clients.
Well, artificial intelligence surely has become the centerpiece for major tech giants, and continuing with our focus on artificial intelligence, global tech company Lenovo plans to invest $1 billion over 3 years in the expansion of infrastructure solutions, AI infrastructure solutions, to accelerate the rollout of artificial intelligence for businesses around the world. Now, this marks Lenovo's largest AI infrastructure investment in history and will expand the company's AI-ready portfolio solutions and services. And to talk about Lenovo's strategy to democratize AI, I'm now joined by President Asia Pacific at Lenovo ISG, Sumir Bhatia. Sumir, welcome to Startup Street. First, tell us how through this $1 billion investment, which is going to happen over the course of 3 years, is Lenovo going to enable faster AI deployment to expand its portfolio, solutions and services?
Yeah, thanks, Shruti, and thank you for having me here today. So very excited about this $1 billion to advance AI infrastructure solutions. So first of all, the three areas that this investment is actually going to go into. Now, the first one being innovating AI solutions. So we're committing $100 million of that billion to bolster what we call the Lenovo AI Innovators program. And this program has been around for about a year. And with this program, we've actually delivered 150 solutions through 45 AI partners globally. So it's really about advancing this, getting more partners in there, and really expanding these solutions across the globe, and here specifically in Asia Pacific. So very excited about that. The second part is optimizing AI infrastructure. So, if I look at today, we have over 70 AI optimized platforms. We've already done about $2 billion of AI infrastructure solutions over the past year. So what we want to do is make sure that, this is just a journey. It's just started. So we want to make sure that we continue to go and grow this infrastructure over time and in this journey. So that's the second part. And the third, last but not least, is about enabling AI discovery. It's making sure that we have a platform to have our partners, have customers to come in and work with our specialists, the AI, the data scientists, the specialists, the service specialists, to work around with that. And that's where the investment's going. So, so very excited about this.
Absolutely. So, but like you mentioned that, Lenovo has a comprehensive AI portfolio of 70 AI-ready and enabled products with new artificial intelligence optimized edge servers. Tell me, how are they superior? And if you could also, elaborate on their wide range of solutions.
Well, so look, I mean, we've got a history and heritage around building the most powerful solutions globally, right? From a server perspective, if you look at, we are the Supercompute 500 #1 company, the most number of installations in the Supercompute 500, and really to be up there, you have to earn your stripes. So obviously, it's about reliability, it's about performance, being better than anybody. And so that's key to it. The other point, very important part, is this is not just about our great data center infrastructure that we build. Lenovo is the only company in the planet that actually can give you a smart device. It can give you some fantastic PCs and notebooks. We are the #1 device company in the world. And then infrastructure, data center infrastructure, right from the data center to the cloud to the edge. And really, that's what fuels innovation, and that's what the growth engine is. Because AI is not about one particular isolated silo, but it's across the entire end-to-end solutions. Like if you look at today, close to 30%, 28, 30%, depending on which analyst you talk to, the data is going to be at the edge. So, so that's also very important. So from the edge, where does the data go?
Sure.
So it's about providing that complete end-to-end solution. And Lenovo is really fueled up to help our customers grow and thrive.
All right. Sumir, you also mentioned about the Lenovo AI Innovators program and the fact that it was launched early last year. In fact, Lenovo's investment strategy includes an additional $100 million commitment to the expansion of the Lenovo AI Innovators program. You've mentioned, what kind of investments you've made. Tell us, who does it support and what kind of impact has the program made on the global AI startup ecosystem so far?
So look, we started this about a year ago, and though we had a formal program about a year ago, but we've been constantly working with partners. Look, one of the things is the ecosystem is what you have to build. Partnership is in our DNA. We've always worked with partners. So we've had about 150 solutions across. Now, if you think about this, a lot of innovations in the last 20, 30 years has come up from startups. Now, these startups don't necessarily have the muscle or the strength to actually cross borders. All these solutions are borderless. They go across and span the world. This program will actually help bring in these specialists, these startups, AI specialists in a particular environment of focus, to bring them into a program that they can actually, one is that we can take them across in different internationally. And secondly, is actually help them to build up in the ecosystem. Now think about this, where you have one particular partner and there's some synergy with another partner that is actually building certain things that they can actually collaborate. So that's about the ecosystem that we can bring.
Okay.
And then also wider partners and services and make them into turnkey solutions and deliver them. End of the day, look, I mean, AI could
Yes.
be a lot of hype where we're looking at certain solutions, but most important is how do we take it to the customers?
Absolutely.
How do we actually put life to it?
Yes,
And
one
that's what
final
is
question,
key.
Sumer, and if you could quickly answer that. Lenovo reached a record annual AI infrastructure revenue of over $2 billion. What led to this, and also any future growth targets that you can share? What are going to be the growth drivers for you going forward?
So look, first of all, these are all purpose-built solutions for our customers. We grew 37% year on year from the infrastructure solution group. We're going to continue growing, and what's going to actually deliver growth to our customers is showing them value, making sure that the solutions that we actually provide them is actually helping them innovate, helping them to go and change.
Okay.
Part of my job that I actually wake up every morning very excited about is we're helping solving humanity's greatest problems also. Solving horrible diseases, helping predict weather and save societies from weather, predicting it, and so forth, right? So those are the things that will continue to go as long as we show value.
All right.
One thing I will actually assure you that we will continue to grow premium to market by providing the best possible solutions and innovations to our customers.
All right, Sumer, and we wish you the very best in your mission of democratizing artificial intelligence. Many thanks for joining us on Startup Street today.
My pleasure, and thank you for having me. Thank you very much.
Yeah.
So Cognizant and Lenovo, they're outlining how AI can impact the future of jobs and our lives. On that note, it is time for us to head into a short break. Coming up next, Individ Technologies raises $35 million in a new funding round. We speak to its founder about the company's fund allocation plans, growth blueprint, and much more. Stay tuned. Welcome back. You're still with us on Startup Street. Now, Individ Technologies, an Indian startup that offers digital lending to small and medium businesses, has raised $35 million in a new funding round led by ICICI Venture. Existing investors, including British International Investment, OP Fin Fund, Global Impact Fund 1, Umidyar Network India, Flourish Ventures and CX Partners also participated in the all-equity Series E round for the eight-year-old startup. Joining us now to discuss the fund allocation plan and the firm's growth blueprint is Siddharth Mahanot, the co-founder and CEO of Individ Technologies. Siddharth, thank you so much for joining us on Startup Street. Like I just said, you've raised $35 million. First off, tell us what you plan to do with these funds.
So primarily the fund, we are in the lending business. Primarily the fund will go towards business expansion. We also plan to deploy the funds towards product development, going into new segments, and largely towards other growth initiatives that we have around lending to these small businesses.
All right. You've also started offering instant loans and enabling working capital finance to D2C brands and software firms. So where are you seeing the most demand? Any new offerings in the pipeline? Can you outline those for us?
Yeah, so essentially we operate in about 5 or 6 segments, starting from lending to retailers, to e-commerce sellers, to people in hospitality business, food delivery businesses. Over the last couple of years, a couple of new initiatives we did was doing automated loans at a very small end ticket size. So now we offer as small as 30,000 rupee loans to with almost like an instant approval. Somebody comes, puts in the data, and gets an instant approval. So a large part of our business over the last couple of years, we've gone down to the smaller ticket sizes and making sure that we are using a lot of technology and data to enable small ticket size loans. So that's been an initiative which has been going on for the last about a year or so and has scaled up very well for us. We continue to want to focus on that. We've also launched our product offering for giving credit to D2C brands, and there we also take larger ticket exposure. Another initiative which is much more recent, which we started about 6 months back, and we continue to want to focus on that. Apart from that, we also want to focus on creating new products. So product for instant payment to vendors, etc., is something which are right now in the evolution phase, and we will soon announce the launch of some of those new products.
All right, so lots of exciting plans there. You've also crossed 1,500 crore rupees in assets under management and disbursed over 73,000 loans. So how do you plan to grow this further? Talk to us about the ticket size of your loans as well. You were just mentioning that you've increased them as well. Who are your clients? What are the NPAs like? Yeah,
so our clients are typically, as you said in the introduction, as micro and small businesses. So these could be people anywhere from, say, a 10 lakh to a 10 crore kind of a annual turnover, right? These, as I earlier outlined, these are people who could come from segments as retailers, so very small retail shops, the mom and pop shops, to more sophisticated businesses like D2C brands or sellers on e-commerce platforms. In terms of the number of loans, yes, we've disbursed about 75,000 loans, approximately 4,000 crores of loans in value, and spread across over 400 cities over the last 8 years. Our average, we offer loans from as small as, say, 30,000 rupees to 30 lakh rupees in our normal business. Average loan size happens to be in the 6 to 7 lakh rupee range. As a company, we also are very, very focused on creating an impact, on creating inclusion. So large part of our loans go to businesses who've never borrowed before, or businesses which have a very small history of less than 2 years. So, average loan size remains in that range of, say, 6 to 7 lakhs. And we want to, make the business more granular. So over the last year, while our AUM grew by about 100%, the number of loans that we disbursed actually went up by 150%. So we are actually focusing on making sure that the impact is spread across a wider number of customers and not coming from larger ticket size loans.
Right. Also, over the last 12 months, you've grown, you claim to have grown 100% in value and about 150% in volumes of loans disbursed. So talk to us about where your revenues currently are at. What are the targets that you've set for yourself going forward for this year? And you're already profitable. So where will the next leg of growth come from?
Yeah, so, in terms of profit, we got to profitability in the last quarter of the previous financial year, and FY23 has been the first full year of profitability, and we will continue to be profitable from here on. In terms of disbursements or the top line, as you say, the monthly, now we will be in that, say, 175 crores of disbursement range, and we want to, make it 3x over the next couple of years. In terms of where the growth will come from, I think the MSME market in India is extremely large. We are still a very small player in that market. We operate in about 5 or 6 segments right now. We would want to double down on those segments and definitely try and figure out a few more segments where we would want to venture into.
All right. Now, the Reserve Bank of India has come out with a new FLDG framework. So, fintechs have raised concerns over the default cover for up to 5% of the loan portfolio under these guidelines. So, what's your view? Talk to us about what you make of this framework and its impact.
Yeah, so our view is that one, it was much needed to bring about clarity in the industry. There was a lot of gray area and a lot of noise around which way this will go from. So the regulator finally coming out with a notification helps the industry because now it gives ample clarity as to what can or cannot be done. In our view, I think FLDG of 5% is quite good. And on our own business, we were operating at FLDG which were below that, or a large part of our business actually gets done without FLDG. Right, so the fact that some of the entities fintech companies which may not have a regulated entity, it gives them a benefit in terms of going and tying up with other banks and NBFCs to kickstart their business. For companies like us, it gives them benefit to tie up with lenders which may have lower cost of capital than us and get into a symbiotic relationship. But our own belief is that 5% is a very reasonable outcome that has come from the Reserve Bank.
So, welcome move there from the RBI then. Before I let you go, Siddharth, any plans to list on the bourses? Do you have plans to go public? Is that something you all are looking at?
Not in the immediate future. I think we still want to focus on growth and creating impact for our customer segment. The current round of fundraise, gives us the confidence to, double down on what we've been doing, execute better, and, that's what the immediate goal is.
Right. So no immediate plans to list on the bourses. All right, Siddharth, thank you so much for joining us on the show. We're completely out of time, but we wish you all the best going forward.
For having me. Thank you. Thank you.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.